So much going on. But one thing I've always said, if you really want to know what's going on with the market, keep half an eye on the fundamentals, the other half of that eye on charts, but keep the other eye on capital. Where's the money going? And to that end, what do you think?
Now, the money is not going where everybody says it is. You always hear, Tina, there is no alternative, FOMO, fear of missing out. You assume that means that money has to be flowing in the stock funds. That's not the case, and that's not been the case for several years now.
Well, when I look up at the board, it's very odd because the stock market not only is losing vol like everything. If you look at historic volatility close to close, whether you look at the foreign exchange space, the fixed income space, it is really getting low. And stocks are starting to join that crowd, but at lofty levels. So let's go to the whiteboard. Jimmy, you have a surprise for us. Yep. What are we looking at here?
We're looking at the total flows of ETFs and mutual funds together for stocks and for bonds. Since November of 2015, $1 trillion has gone into bonds. Since November of 15, $100 billion has come out of stocks. Money is coming out of stocks, going into bonds at an unprecedented rate. Again, at the time that everybody says it should be doing the opposite.
No, and there is no alternative. Tina, what you referred to,
right.
It's almost being used as a crutch because many don't believe that the economy has the underpinnings to warrant such a hot stock market. So if this is the case following the money, what's the driving force, A, keeping stocks up, and B, keeping interest rates from going down farther?
Well, I think that there's two driving forces here. One is definitely higher rates. The Fed has hiked rates 9 times, then took back 3, but that hasn't kicked in yet on these numbers. So people are chasing higher yields. They understand now that in this world, a high yield you jump over the desk and grab is 2%. And you're seeing a lot of short-term bond funds seeing that. Aging demographics. In the developed world, every day we had 8,000 more people at the age of 65. They're also looking at reducing their risk by buying in fixed income. So you've got those two. On stock front, what I think is supporting the stock market is buybacks. So a lot of that money that's going into fixed income buys corporate bonds, which companies have issued to buy back their stocks as well, too. So really where the public has been putting their money has been exactly the opposite of what you hear. They've been plowing headlong into bond funds, and no higher stock market is going to change this. We've been saying this for 10 years. Oh, if the stock market goes up, they'll capitulate in the stocks. It's gone up 400%. And this trend is accelerating.
Oh, it's a contrarian trend.
Yeah.
I mean, that's pretty much what you hear.
Right. But like I said, the stock market's up 400%. And look at what it's done the last 4 years. You could go up another 400%. What you actually need is for yields to go back to zero in order to get people to probably pull out of bond funds at this point. And that's only going to happen if you have a recession.